I assume everyone is calling from home. Are you calling from office? Well, I saw Dayon's offices.
Well, home office.
Home office, yeah.
Oh,
Nice.
sorry, you're right.
I think you've got some nice marketing there in your home office.
Well, thank you.
Osita, are we live with the audience as yet?
Yes, just a few more minutes.
Okay, we've got a few questions
yet, but we'll be going live in the next 8 minutes. Okay. Hello, everybody. Welcome and thank you for joining us. If you're new to online webinars or you're a fan of Innovation World like myself, we are happy to have you and I hope you enjoy this event. By the way, I hope you all are safe, are keeping that 1.5 meter social distance for your well-being. It is in such difficult times like this that we see the best minds and key thought leaders and experts in various sectors of economies come together to discuss and formulate strategies for growth and development that will steer the world into new economic and financial heights. And this is one such event where you and I engage with key leaders and ecosystem builders to gain insight and perspective from their views. I must say it's a pleasure to have all the speakers joining us today in this panel discussion. Before we begin, let me introduce myself. My name is Osita Ekon. I am Regional Director and Business Development Manager at LaToken. LaToken is a digital asset trading and crowdfunding platform. As an asset tokenization platform and secondary listing market, our goal is to bridge the gap between the capital market and the world, connecting entrepreneurs and startups with institutional investors and retail investors, thereby enabling easy access to money and capital worldwide. It's my honor to be your moderator for this event. So just to let you know, this will be a 90 minutes discussion followed by a 30 minutes Q&A session. And I would suggest that all the attendees, maybe you have questions for the speakers. So I would suggest you post those questions while the event is going on, so that as soon as the speakers are done speaking, we go straight to those questions without having to waste time. Okay, so I would like to officially kickstart this event by opening the floor to the speakers so that they can introduce themselves to the audience. So speakers, please tell us who you are and what you do. Perhaps we can start with Luqman.
Okay, thank you, Sita. Good afternoon, everyone. My name is Luqman Balogun, the Divisional Director for Africa for Dayon. Dayon is an identity insurance company. We've been around for 20 years, focused on developing specialized solutions for digital onboarding and biometric authentication, where you can combine all the existing biometric factors together to do a cross-channel authentication for banks and other financial institutions. Like I said, we've been around for 20 years, providing solutions for banks, government agencies, aviation sector, and other sectors also. So I'm excited being here, and I look forward to having a fantastic session with everyone. Thank you.
Thank you. Paresh?
Yeah, hi everyone, it's Paresh Daya. So I am the Chief Strategy Officer for a company called Fraxium, and we provide a innovative launchpad platform for fintech businesses to be able to build their business models based on digital assets. We strongly believe in a new financial world in terms of democratization of access to finance by providing very disruptive and innovative fintech solutions for the future. And Fraxium basically provides the building blocks for companies to be able to fulfill this. I'm also the co-founder of a company called Blink and Bexa, which is the Blockchain Entrepreneurs Club of South Africa. And we are very much geared towards building a inclusive and cohesive blockchain ecosystem across South Africa, Africa, and the world. I also sit on the board and the consensus member of the South African National Blockchain Alliance, which again is there to catalyze and facilitate blockchain development within the South African context. Thanks.
Thank you. Jonathan?
Yes, Attorney Jonathan Dunsmoor of the United States. We represent people all around the world involved in blockchain technology, fintech, banking tech, reg tech, everything from consultancy to if you're trying to raise funds in the United States, or God forbid you actually have a problem with one of the regulators in the United States, we handle that as well. So what we believe is we're trying to facilitate the larger growth of the blockchain industry, but also the technology behind it. And so us as Americans, we like to invest and we like to move progress and see technology expand across the globe. And that's what we're working on here.
Thank you, Jacques.
Yes, I'm Jacques Ludik. So I'm the founder and group CEO of the Cortex Group. So Cortex Logic is one of the companies within the group that's AI engine for business. So we operationalize AI end-to-end for corporates and business enterprises. We're also building disruptive platform businesses, AI-driven platform businesses, and obviously excited about smart tech like blockchain, the combination of blockchain and AI as well. I'm also representing the Machine Intelligence Institute of Africa, which is a non-profit organization, and the focus is really building the AI and smart tech community in Africa. And you can go to miaafrica.org to find a bit more details about that. It's also a pleasure to be here. Looking forward to the discussion.
Yudhvir?
Cool, thanks. Hi, everyone. My name is Yudhvir Seetharam. I look after analytics, insights, and research for F&B Commercial. It's one of the big four banks in South Africa. I also lecture at the university on topics on risk management and investment.
Right. Thank you, and thank you for joining us, and welcome. In today's event, Banking, AI, and Blockchain, we're looking at redefining the digital banking opportunities and accelerating value creation in blockchain. And the key point discussion this evening are artificial intelligence, data authentication, data security, cross-border transaction, ICOs, decentralized technology, and crypto payment solution. And so we're going to begin with cross-border transactions, and I'm going to come to you on that, Paresh. Frictionless trade across borders is integral to growth and development for the current global economy. However, rising costs and inefficiencies are a growing challenge to regional and international remittances. In seeking to reduce the cost, time, and complexities of inter-regional and international remittances, various products has been offered to consumers, which are e-wallet, mobile money, etc. Behind the scene, there's a current or new technology, perhaps best known to those conversant with blockchain, and this is DeFi, decentralized technology. And so I would like to hear your opinion on DeFi. Is DeFi a viable financial technology with potential to facilitate reform, drive growth, and solve the global challenges in banking and remittance services sector?
Yeah, look, I think that remittances and cross-border payments is always a hot topic, right? And I think that, a lot of countries suffer with this. And as a global population, we suffer with the issues around cross-border payments itself. I mean, if you had to have a look at expats sending money back home, they would be spending in terms of fees anywhere between 5 and 15% using various different, money transfer operators or potential companies like Western Union, etc. So I think that the potential to streamline this and remove the central intermediaries, which in essence will then reduce the costs and have faster transaction times and faster cross-border payments, are there right now. And the technology exists, right? So the blockchain technology, using cryptocurrencies, using digital assets. So I'm going to talk about it from a non-technology perspective, because I think that the tech is already there. I believe that digital assets is going to play a big part in terms of a financial reform and where we're going forward with forming a new financial system. Now, your comments around cross-border payments and especially DeFi, I think that the decentralized finance movement is interesting. Predominantly right now, it's being based within the lending and the borrowing space. Predominantly with solutions being built on the Ethereum blockchain. Now, if we just had to look at the market capitalization of DeFi itself, I think they hit about $1 billion in terms of lending and borrowing a couple of months ago. And if you have to have a look at those figures compared to what the market cap of the traditional financial system is, which is probably about 80 to 90 trillion US dollars. Worth of financial transactions and instruments that are currently running. So DeFi for me is a very nascent domain and a nascent space at this point in time. But for me, it's the foundation that is being built right now to facilitate peer-to-peer transactions. Does it have its problems? Yes, no doubt about it, right? I think that there's multiple issues in terms of collateralization, in terms of the underlying technology, the scaling of the technology, and also when it comes to user interfaces and client experiences, which is pretty much non-existent within the space at this point in time. So yes, there are massive hindrances in terms of getting a mass adoption in terms of this particular space. But I think that we're still in a very, very nascent space, that we are still trying to form the foundations of what a future financial system will look like in the future itself.
And thank you, Paresh. And Jonathan, what do you have to say on that?
I completely agree. As sexy as the word DeFi is and how exciting it's going to be, we just need more solutions. We need more people working towards it. The lending and borrowing space is great, but you know, even just basic evolution of it from stock ownership to, you know, what we call sweat equity. I'd like to see that kind of expand across the globe, especially in South Africa. I remember having, when I attended the first event with Finovation, that I had an Uber driver named Simba that worked for Uber because he got paid so much more and he was able to make his own hours. But if that same driver was able to participate in the stock market by getting earning shares per the miles driven, that would create an entirely new economic system, not only for Simba, but also for the country in which he lives and the continent in which he resides as well. And it also adds market liquidity, which is what generally all markets need, regardless of how big they are. So it's those kind of decentralized financing solutions, not only just for the lending and borrowing, but also the stock ownership plans, that I really think are going to kind of push us to this new financial model that Paresh is talking about.
Thank you, Ed. And as much as we want to talk about new financial products and DeFi, one thing that one product or from the government that is currently making waves now, it's CBDCs, and a lot of central banks are into research and development and posting different documents on CBDCs. Tell me, Paresh, if finally we see CBDCs in circulation, what are the potential advantages of these tokenized fiat money? Will CBDCs see the end of commercial banks?
Yeah, great question. So how long do I have? Do I have about 4 hours to answer this question? I think I can try to get it in about 4 hours. Look, so CBDCs is a hot topic right now, right? Especially pretty much from January 2020, where a lot of the central banks started forming kind of CBDC DLT style innovation environments within governments and within central banks itself. I just want to quickly contextualize this. So when we talk about CBDCs, there are actually 2 types of CBDCs, right? One is on the wholesale side, and this is particularly when we talk about interbank payments between large institutions like commercial banks, and these are the various different obligations that they need to net and settle out amongst themselves. And the second CBDC context is what we call retail. Now, retail would typically be transactions between myself and someone else. So, for example, if I want to pay John $15, for example, that would be considered a retail transaction within the fiat currency. Now, I think that a lot of the commercial banks are starting to look at this from a retail perspective and to figure out, what are the monetary policies and the models that they can start forming behind these CBDCs. So essentially, a retail CBDC would be a digital equivalent of cash. Okay. Now, we have to be very clear about this. When we talk about a digital equivalent of cash, this retail CBDC would be a liability on the central bank balance sheet, right? Not on a commercial bank. Now, when you talk about, would this be a downfall of commercial banks? In theory, potentially, yes. Okay. Practically speaking, definitely not. Okay. If we have to have a look at the various different white papers that have been written from the central banks, a lot of them talk about a kind of 2-tier mechanism where a retail CBDC is issued directly from the central bank itself using a second tier as a distribution mechanism. Now, what that second tier could be, it could be anywhere from just the commercial banks itself all the way to fintech providers or other financial institutions itself. Now, if we had to look at the digital dollar white paper that was just released, it was very fascinating to me because it only stated that commercial banks would be that second tier distribution layer, not taking into account any other fintech. So my personal opinion is that commercial banks are not going to go anywhere anytime soon in terms of a CBD context. Now, I think that there's a lot of political and kind of economic bias around those sorts of topics, which I won't get into at this point in time. But essentially, some of the advantages that we could see with CBDCs is around, getting money to the people. We see this in the US today in terms of, helicopter drops, and, the US government is, printing out checks and posting that, via the post office. I mean, this is, totally archaic ways of distributing money. So, that could be one, advantage of it. We could see democratization of access and payments mechanism using a CBDC itself. I won't go into all of the, kind of advantages, but I do think that we need to talk about some of the disadvantages of a retail CBDC, which is not talked about by, I think a lot of people. And I think from a privacy and confidentiality perspective, this could potentially be a mass infringement of privacy to the average citizen. So I'll just kind of pause there. I know that John will have a lot more thoughts, obviously from a legal perspective, but I'll just kind of pause there. Osita, if you want to dive into any one of those details, I'm very happy to actually do so. But obviously, it's a very, very broad question.
Thanks. I know Jonathan will have a lot to say about that. And Jonathan, just in 2 minutes or so, what's your opinion?
I think it's great in theory. I think that it has a lot of practical solutions, as Paresh was saying, for the U.S. stimulus checks. They're looking at possibly using a blockchain solution for the next round, because sending out checks in a physical form is absolutely archaic, especially in 2020. And so I think that if done properly, it could be very revolutionary. But just like anything with government, the wrong route or the wrong method can really derail a lot of really good things. We already have some really successful kind of payment apps. I don't necessarily think that using a CBDC in the beyond kind of that wholesale institutional level really helps at this point, because the technology is so misunderstood by our governments. And that's all governments. All the governments that we've spoken to don't really understand it as well. And then, as Paresh was talking, the privacy element of it is very terrifying. One of the reasons that the U.S. government deals with cash and does its dirty business in cash is because it's untraceable. Whereas a digital dollar, you can trace it back to everybody who's had it.
Thanks, Jacques. I see you're not in agreement to that. Do you want to add to that?
No, well, I'm pretty new to this whole central bank and digital currency stuff, so I've got more questions. So no. It's fascinating. Principle, it sounds fantastic. I love the benefits that is listed. Even in Wikipedia, they talk about all these kind of benefits. I just see benefits, and the risk is there's just there's not really a lot of risks, but privacy clearly is one. I don't have something to contribute specifically there.
Thanks. Now let's talk about artificial intelligence, Jacques. Although AI use in banking is still nascent, it appears AI is being used for financial crimes and money laundering in banks. So, what are other areas in AI is more important to banks?
Yeah, I think for financial services in general, there's broad applications for AI, and even with blockchain and stuff, I think it would be very interesting with smart contracts if you actually bring AI on that level as well. But just the general applications around AI is anything from credit risk. You can get more AI-driven credit risk analysis and scoring to complement the current traditional methods of doing that. So there's quite a bit of stuff happening there. In Africa, we also see a kind of utilization of non-conventional data. If you don't, for instance, have access to credit bureau data, or so you don't have any credit history, how do you actually build up that history quickly? So I was involved in a company just before I founded Cortex, called Jumo, and they were providing this, or they're still providing this kind of engine or platform for mobile money. And basically what we did there was to actually, there's obviously focus on microloans initially, but now insurance products and other things as well. But what we did was to actually look at the wallet behavior and also the call direct records and infer patterns or information from there to actually determine risk and then build up the risk. And as people pay back, they qualify for higher loans and those type of things. So credit risk is clearly a big area. But obviously in trading, I'm also involved in Forex and trading. We've got AI-driven solutions around those type of things. There's massive applications there. So hedge funds, asset managers utilizing AI to maximize investment, portfolio optimization, high-speed arbitrage trading, trade surveillance. You can do all sorts of things. You can look at obviously abnormal trading patterns. Is there market manipulation happening, fraud detection, all of those type of things. So there's huge applications there. And even if you think about compliance, reducing costs, massive applications there. And then I would say the other big one is for any customer-facing business, it's really around more kind of personalized, on-demand service delivery. So when you interact, if it's a banking customer or insurance customer, you want to provide them with the relevant information or products or services. So you want to obviously have that 360-degree view if it's possible. You want to build that, and then things like intelligent virtual assistants and robo-advisors and all of these kind of things come to play. Massive applications there for AI. So it's really about that personalized customer engagement. You can drive your loyalty programs with this. You can do recommendations like Amazon and Netflix and all these kind of things. You bring that capability to the financial services, where you can do much better, relevant recommendations, do cross-selling, upselling, provide digital advice, and so forth. And then I would say on the insurance side, there's so much you can do there as well in terms of automated and say augmented underwriting or robo-claims adjusting, those type of things as well. So it's massive, the applications for AI. So yeah, very disruptive.
Thank you.
If you don't mind, that's an interesting point when it comes to compliance, right? Because
yes,
if we have someone using a CBDC where, let's say I'm using it, and sorry to throw Paresh under the bus, but Paresh is not using it. Maybe the government gives me some type of economic incentive, or the bank gives me an economic incentive because they can trace every single dollar I spend. They know, where everything's going. Whereas Paresh may have a lower savings account rate or a lower, who knows, a higher compliance rate. His mortgage rates may be far worse than mine. And that's where, things kind of start becoming a little bit more, not necessarily as equal as they should be in this new modern economy.
exactly.
Thank you. Luqman, do you have, what's your opinion on that?
Yeah, thank you so much, Osita. I totally agree with Jack. Like, some years back, was it Bill Gates that mentioned banking is necessary, but banks are not. So when you look at it from that perspective, it's like a wake-up call for bankers. And and when you look at industry generally, banking is one of the oldest industries that we have in the world. And you can say when AI became mainstay, it's obvious for the banks to find a way to position itself in terms of how best to use it. Because when you look at most banks, they are sitting on tons of data. They've been around for a very long time. And like you say, and they've got legacy technology. So the question is, how would they transform into using AI to actually achieve a lot of goals that will enable them achieve the return on their investment? So my take about this is, and when you follow the money in terms of what banks have been doing in terms of investing into AI, you realize that the banks are very clever. They've been spending more money using AI for compliance and risk management purposes, because that's only, before you can do the offense, you need to ensure that you take care of the defense. And like, banking is highly regulated. So the way they position it themselves, they must ensure that AI being used properly, starting with compliance and risk management issues. And there are lots of use cases in terms of how it is being used to actually identify money laundering, and also when it comes to KYC issues, and also doing customer due diligence. So that is one area the banks have been spending a lot of money. I did a research and I realized that almost 75% of the investment on AI for banks are actually being channeled on compliance and risk management issue, and about 12% on customer facing. But the customer facing is actually the cool stuff, which they like to talk about all the time. Issues like, okay, onboarding new customers, using robo advisors, and also doing some other stuff like locational intelligence for their costs. So when you look at AI per se, it is endless for banks, but the question is, banks need to be very clever in terms of how to position itself to make use of it properly.
Yep.
Thank you. And Yudhvir, can you tell us, is AI efficiently being used to combat fraud and prevention of money laundering?
So I think it's well, the way you asked that question is actually quite interesting. If there is a pattern to figure out, then yes, one would hope that AI would figure it out. But the minute that there's something that hasn't been done before, that's where the pattern kind of breaks, right? So it's a very interesting way that you put the question, because the reliance over here is actually more on identifying trends and patterns, in which case then your whether it's AI or simple methods, that the whole point is pattern finding in them. AI is a bit more flexible with pattern finding, so cool, that's 100%. But the minute there's something that is new, that I believe is where the sort of, I'm going to call it real test of AI becomes quite prevalent. Something that's never been done before, let's talk about money laundering. If money was laundered in a never been seen before way, would AI actually go and pick that up? And it's an interesting enough point, right? To go and see that if it is something that can be detected, then awesome. If there is no data for it, then that's something where you'll only know after the fact. So I think on the fraud side, and definitely on the compliance side of things, there's a big push towards automation. So let's try and replicate or mimic the way that a human being would actually go and investigate these things, which AI helps a hell of a lot in. I think there's also been some interesting patterns that come out of applying AI to fraud use cases. But I wouldn't be convinced right now that all types of fraud are being identified from the existing methods.
I just want to quickly, Sita, just comment on that. I agree with you, Yudhvir. I see some parallels with even cybersecurity, where I think with cybersecurity, you also see this unknown threats, and how do you tackle that? So, and even with fraud, unknown ways of doing fraud, there are techniques like anomaly detection, where you say what is normal, and then anything that deviates away from normal, what you say is normal, you can try and detect that, and that could flag something, and then you can obviously apply other models and see if it's a real threat or not, or a real fraud. So there are techniques where AI is being utilized for that, but obviously it's now you have to define what's normal, and that's where the problem also come in. But anyway, so it's fascinating. I think. It's pervasive, the problems around fraud, and I've mentioned there things like manipulation, market manipulation. How do you pick it up? If you talk about abnormal trading pattern detection, what is an abnormal pattern when it gets so complex, the world? So I think what we will find is it's not just people that sits behind it. Could be AI-driven threats or systems. So it could be very sophisticated actors that is actually doing fraud or posing these security threats. So I think we're going to have a situation where they talk about red and blue AI defended. You've got defenders and attackers type of scenario as well. So this is the kind of world that we've created. So we need, so some of these smart technologies need to come up to the party to actually help solve the problems as well. But anyway, it's yeah. there's a lot of savings and a lot of, I think AI can have an incredible impact in terms of detecting fraud, but it will become more sophisticated and it will become more difficult. So yeah.
Luqman, do you have a view on that?
Yeah, you know, when you look at the fundamental of AI, it's meant to learn, you know, to identify patterns over time, to recognize what's happening. So right now, I would say it's still early days in terms of at least getting to the final result that will make everybody, because when you look at the AI algorithm, it's like a black box, basically, and like you need to train it, you need to get more data. And over time, like someone rightly said, you know, if AI is being run by finance people, basically you will never get to see AI at all because the immediate return on investment will never come. But over a long period, you realize that fine, this issue of identifying anomalies, because AI per se is being used globally and across sector to actually handle complex activities. So in banking, there are a lot of activities that are so complex and like managing risk, identifying patterns, and seeing how you can control cybercrime. So these are things that we have, bankers, they have tons of data already. And these data are being mined, are being processed by the algorithms to ensure that fine computer can actually do what humans can't really do efficiently. So over time, I think there are a lot of promises, but maybe in the short time, we won't get the right pattern, but over time, the system will get more fine-tuned to be able to deliver on the promises that everybody is looking at.
Thank you, Luqman. And let's talk about data authentication. I know you represent DAWN, which is an identity-centric organization, and you have a bunch of services from fingerprint, facial recognition, voice, and multi-factor authentication. Can you talk to us about multi-factor authentication, what it is, and why it's important in this digital age?
Well, thank you so much. You say, for any bank that wants to embark on a digital transformation journey, there are 3 buckets that need to be looked at. The first one is, how do you onboard your customers from the comfort of their homes without moving at all? That's the first thing that comes to mind. And, you know, if you can get it right, then the other 2 will fall in place. The second bucket is, how do you get the same customers that you've onboarded seamlessly to gain access into your platform remotely? How do you know them? How are you sure the same guy that you onboarded is also the same guy logging in? And the last one is, how do you ensure that these guys, after coming to your platform, they can do transactions to a large extent? Whatever transaction they can do in the physical world, they should be able to do in the digital world. And how do you ensure that the experience is so seamless to be sure that at the end of the day, the same person that you onboarded is the same person that logged in and also the same person that is also doing transaction. So the best way so far is when you start using multi-factor authentication in terms of biometrics. But the first step is like, and I can also look at, by the time you look at these 3 buckets, then you also, going forward, you know, that's the first step. The second step is, how do you ensure that you have an AI strategy to be able to actually satisfy these customers when they come in? But talking about multi-factor authentication, when a customer comes in onto your platform to open an account, you need to ensure that AML, anti-money laundering, you know the customer and you're doing customer due diligence. So you have technology like what we do at Dayon, where you can actually certify that the person that is opening an account is a real person, and the person has an ID that is also, that can be authenticated, that this is a valid ID, and the person is also authorized to use the ID. And so in a simple way, the guy does a selfie, and also the ID card is also extracted and then compared. These are algorithms that have been prepared to ensure that you're checking whether the person is alive, whether the person is also using a mask or the person is real, and also checking multiple databases to check whether this person is who he claims to be, whether he's on watch list and what have you. And then after you've done that, the next thing is, how can this person log in? Currently, most banks still use password, PINs, and some other token to gain access into into internet banking or mobile app. But at the end of the day, I can claim to be you using your password. But the long and short of it is that using biometric, you're sure the person that is actually logged into your system is the real person that actually enroll with you, because you can actually verify. And all these are also work of artificial intelligence, capturing all the features of your biometrics. And the final one is when you're doing transactions, how can you ensure that someone that is not in your office can do each transaction and you have peace of mind? Using password or PIN can be replicated by anybody. So, but with the biometrics, whereby you can combine multiple features, and this is what we do, whereby you can combine your face, your voice, and your finger together to execute a transaction, ensuring that you're using your biometric and also using a device. Combining both together means you're using a multi-factor, multimodal authentication solution to solve a problem that most banks are having issues with, because that's why we have a lot of cyber crime, cyber activities all over the place. So in a nutshell, when you combine multiple biometric factors with additional devices and additional security factors together to authenticate a transaction, that is where you're saying you're doing a multi-factor authentication for any banking transaction. Thank you.
Thank you. Thanks, Luqman, for that information. Now, let's quickly move on to the ICOs. And Jonathan, I'm going to come to you on that. 2017 saw the proliferation of ICOs. Some of them were scams, and the majority of them now, the projects are dead anyway. So I would like to hear your view, your legal opinion. Will there be a comeback for ICOs, or will issuers stick with the ICO alternatives like the IEOs and STOs?
That's a really interesting question. I believe that almost all ICOs were garbage. So whether they were scams or just because they just could not perform, there's only been probably less than 1% that have actually been successful over the course of their company career. So yeah, to answer your question, there of course will be some type of crowdfunding mechanism, whether it's called an ICO or an IEO or whatever kind of derivative that we derive. There's going to be some need for the crowd to participate in things that we like. Shark Tank and Lion's Den and all these other kind of things have kind of awakened that entrepreneurial investor in us. And I think that the ICO was, if anything, the perfect example of why global market participation is really exciting, even though for the most part, it was, like I said, basically an exit scam. But when you look at, the broad possibilities, for example, last time I was in South Africa again, there was a gentleman who pitched at the conference developing economical environmental bricks, and the funds that he was looking for to basically reach a beta level were relatively minuscule compared to what you would need in the States to basically develop the same thing. And so what you would have is access to capital markets that generally you don't have access to. And so once we can start developing interlocutory network of really trusted partners using identity solutions, using AI, using compliance protocols that make sure we know who the money's going to, then we could really start providing with just absolute amazing efficiency capital markets, either capital or capital markets expertise, meaning that if someone needs a blockchain technology person in LA, they can do that because of remote technology, because they know they're going to get paid those shares on a blockchain. They feel comfortable in working for a startup on the other side of the world. And those kinds of newer models are what are going to be kind of the legacy of the ICO, is that it proved that there is global participation from retail investors. And so when you scale that globally and you do it in a really compliant and regulatory approved manner, you're going to get some really cool solutions.
Thanks. And tell me, I mean, obviously the whole trend bubbled and busted. And from your legal view, what would you say that the industry did wrong?
They didn't deliver on their promise. So anytime you open a business, whether it's an ice cream shop or one of the DeFi solutions, you got to deliver on your promise. And some of those people that wanted to do what they claimed in their white paper were hindered possibly by the law. Some of them have ran into significant regulatory problems, being money transmitters or having other regulatory issues that they just didn't know about, and they didn't have proper legal counsel to guide them. Or it was a solution where, you just didn't, not to throw anybody under the bus, but there's been some really large ICOs that have had millions, if not billions of dollars thrown at them, and they're still not able to do anything. And when you look at EOS and some of its other competitors, you kind of laugh and say you've had as much money as you could possibly need to develop something, and you still couldn't deliver. So that's a problem. And that's a problem that we don't have the market solution for yet. One of the reasons that coffee shops and fast food joints in the United States are really easy to do is because we understand the model. Same thing goes with, basic businesses. We understand what those look like. We understand how to form those. But when you talk about DeFi solutions or AI or compliance level solutions that just don't even exist yet, we don't know what those look like. We don't know how to regulate them. We don't know how to facilitate the growth and expansion across the world. But it's one of those solutions where, whoever's able to figure it out, who is ever able to put the Uber model together, will see that it expands globally, because everybody hates getting a taxi when you can just flip open the app and just pick me up here.
Thanks. And Yudhvir, what's your opinion on that?
So by all means, not speaking from an expert position here. So I guess it's more layman comments. I guess at the end of it, the last point about it needs to be done. You actually need, I guess, the awareness of this to start spreading first. Similar to like the whole AI conversation, right? I mean, AI is not a new thing. It's been around for a significant amount of years, 50, 60, if not more years. What is new is the awareness of people to see the potential of that in whatever industry. So similarly with trying to incorporate more crypto methodologies and crypto solutions in, let's say, banking, for example, it actually requires a outside of the box approach to say that, well, can we understand what this thing is in order to then try and figure out if it works or not? And I think the root of that is actually awareness. So I mean, by all means, not an expert on commenting on the regulatory side of things, But I think the root of this actually goes to the awareness. Do people even know what it is in order to then see the potential of it? And I think over there, the one answer certainly is no. People hear about Bitcoin, but the minute they start talking about crypto, it sounds like something different, when actually it is the one is the foundation for the other.
Let me just add quickly onto that, Osita. So I think that, John's comments were spot on, and, I won't cover what he's already gone through. But in addition to what he said, I think that a lot of the companies that were launching ICOs in 2017 were actually launching security tokens rather than utility tokens, right? Which then puts them slap bang in securities regulation. And now you start getting calls from the SEC saying, why have you launched a underlying security token that represents some sort of value within the company itself, right? And I think that 99% of the companies that were launching that in 2017 were actually security tokens. So I think your question around ICOs versus STOs versus IEOs is neither here nor there for me, right? It's just a very different form factor of whether you want to launch it on an exchange or you want to do it on another platform. It doesn't really make a difference to me. But what we're talking about is actually democratizing the access of fundraising to, people that are traditionally at the lower LSM of the market, right? And that for me is really what the heart of a token sale, and I'm not using the word ICO, is what a token sale actually represents itself. Now, I'm not going to front run what we're doing, but we're actually going to be launching a company in about a month's time that is going to be looking at crowdsourcing funding for specific companies within a specific target market and sector. So essentially what we're going to be doing is we're going to be tokenizing equity share classes within the company itself and providing fractional ownership of that out into the public, right? So the actual public would be able to buy into these sorts of companies from anywhere as little as 50 Rand or $5 all the way up to the actual hard cap that we're actually issuing. But I'm just giving you an example of the actual movement of what a token sale would actually represent in equivalence of how a company actually gets taken private in terms of a private issuance and then trading on a secondary market. We're trying to bring that into the private market. And I literally think that token sales are going to be an additional funding channel of the future. It just needs to be done in a regulatory compliant manner, which is why countries like Seychelles, Mauritius, Bahamas, Switzerland to a certain extent, are actually coming up with security token regulation in terms of everything from exchange to custodianship to CCPs and CSDs, etc. So if it's done in a regulatory compliant manner, I foresee this as literally the next evolution of funding in the market.
Thank you, Paresh. And just quick one there on blockchain ecosystem in Africa. What's the current state of blockchain in Africa, and with the African Continental Free Trade Area in view, how can blockchain impact and transform the African landscape?
Yeah, look, I still think that we're seeing a lot of solutions predominantly based within the crypto space, right? Especially using crypto as a payment rail mechanism, and also seeing a lot of solutions in the mobile money and the wallet-based solutions and cross-border remittances. In terms of actual blockchain solutions itself, we see a couple out in Nigeria, Uganda, Kenya, and also South Africa as well. But we're still playing catch up to what's happening out in the US and Silicon Valley, in Berlin, London, Singapore, Switzerland, etc. And I think that there's multiple issues to this and why this is happening. In terms of education, in terms of knowledge sharing. Startup support in terms of investment at the pre-seed and the seed level is pretty much non-existent on the continent itself. In terms of mentorship, support, incubators, accelerators. So it's not just, I think we need to tackle this as a startup ecosystem holistically, and then start facilitating, understanding of blockchain and how that can then be used to actually solve some of these pertinent problems on the continent itself. But in terms of the free trade agreement that we're seeing within Africa, I think that we need to take as much advantage of as we can with this particular agreement in terms of, how do we streamline trade? how do we utilize, trade finance and supply chain management, and utilizing blockchain as a technology enabler for these sorts of value propositions and use cases. So, I think that we have a lot of stumbling blocks and hurdles on the African continent itself, which are trying to be alleviated, but I think we need a lot more kind of rocket fuel within the space.
Thank you. Thank you, Paresh. We are obviously coming to an end of this event. I don't see, so far we've got only one question from the attendees. I will quickly ask the attendees to please post in whatever question they have for any of the speakers, so that we can take those questions as soon as we are done with this event. Jonathan, you're a lawyer, and I just want to ask you quickly, from your perspective, what regulatory framework do you see as a hindrance to blockchain development globally?
The biggest problem we have right now, especially in the US, is we still don't have a clear definition of a utility token. We believe we understand it due to 3 or 4 no action letters from the SEC, but those kind of contradict what the CFTC, the Commodity Futures Trading Commission, believes that they have purview over, regulation over. And so there's this still underlying question of, if something is a utility, does it mean it's a commodity? And we don't know the answer to that. And so, as Paresh was saying, when it came to security tokens, if it does fall within that utility model, does that mean it's regulated by the CFTC? And the answer is, unfortunately, we're not sure. The CFTC believes it. We don't necessarily believe it in all cases. We think that it could be in some situations and with certain companies. But in other models, it's just a simple Mario token, or some other kind of incentive marketing model that is outside of their jurisdiction. And so we've still got a lot of development there. And then from, the blockchain development itself, proof of stake is very interesting. We don't know what the regulators are going to think about it. We've tried to get comments and opinions on it, and unfortunately, no one understands it yet. And so as we develop that ecosystem, we're going to have a lot more lawsuits. We're going to have a lot more regulatory opinions. We're going to have a lot more no action letters, hopefully. But it's still a new and developing world, and it's going to be one in which I hope we're all able to participate, whether it's from an AI or compliance model, or it's from just a blockchain solution that underlies all of it. Because I think the global model for sharing and disseminating information and knowledge, and providing investments and that knowledge base to various companies is going to be something that thrives in this century.
Thank you. Thank you. Let's move on to data security. Data security, in data security, governance is critical. And data governance allows for the monitoring of data and provide a point of validation and regulatory compliance, and facilitates the identification of policy violation. And I would like to hear from Yudhvir, what's your view on data governance, and do you see blockchain fulfilling the role of governance in data security?
Yeah, thanks. So I see the general idea of data governance. And I think it was also one of the comments raised earlier about privacy or lack thereof. As any financial services company, the privacy, the security of your data becomes extremely important in order to ensure that there's trust. Because at the end of it, it is, as much as it might be a transaction, it's still a transaction of trust. You are trusting whoever is on the other side to look after, let's say, your money. You need to make sure that there's a high level of trust that's always instilled in that. So the general trend towards increasing data governance, towards increasing the regulation, the usage, the quality of data has been on the rise, especially from a financial services perspective. So I mean, if I look at South Africa, one of the big things over the past, call it year and a half, 2 years, has been POPI, and what are the implications of any company for that matter adhering to and abiding by the regulations of POPI. So definitely governance is a hot topic for any financial services company. If we then sort of sidetrack from that into how does crypto actually help in the governance process, I think, again, similar to some of the previous comments, it is going to help to the extent where people understand what are its pitfalls and people understand what are its advantages. So from and again, speaking from a limited understanding here, crypto is, I see the value of having a blockchain, sorry, not crypto, a blockchain type solution to housing and using data securely. My only concern with that is, if I look at South Africa at least, there's still regulations and usages that are being discussed from either a crypto perspective or even underlying that on a blockchain perspective. So trying to go and move down the road of saying, okay, we need to incorporate blockchain technology into, let's say, how we secure and how we govern data, that might be feasible, but unless there's actually regulation that guides that, it's sort of like a chicken and egg problem. You might want to go down the road, but you don't really know if the regulation is going to force you to do that or not. So I see that as a chicken and egg thing. In the absence of that, one needs to then make sure that at the very least, do you have secure information or secure data on premises, on the cloud, whatever the solution might be? Do you have secure data on that? And then we start to get a little bit more, I'm going to call it philosophical, by going into, I think Jacques mentioned it before, a single view of the customer. Because then you start to question, okay, at what point does a single view of the customer become an invasion of privacy or not? Which gets us down a different type of rabbit hole here. So at the bare minimum, governance from a data quality, data usage perspective has definitely been on the rise. Question mark on the blockchain idea: is it a chicken and egg thing? And then a sort of a deviation into at what point should data be governed or even not governed when we start talking about privacy issues.
Thank you. Jacques, do you have a comment on that?
I agree with you. I think it's just in terms of the last few sentences, what Yudhvir was saying there, I think there's an interesting, the whole thing around data privacy and a 360-degree view of the customer or a single view of a customer is a very interesting. So obviously you need consent. You need to go. So for me, a user needs to know exactly how my data is being utilized. So I think one needs to be super clear in terms of consent. This is actually, we are also building financial wellness and also health wellness solutions, and to actually provide this personalized engagement with the customer or the member of a medical scheme, for instance, very, very important to make sure that you've got to be upfront about what data is being utilized, how is it being utilized, and so forth as well. So those things definitely is important. So you can, the things that we are anyway working with and struggling with from an AI perspective in terms of providing solutions is very relevant for other smart tech solutions. I'm even thinking about Dayon in terms of biometrics and all of that. You want to tell people how their data is being utilized. So there's massive responsibility on all the stakeholders in terms of how data is being utilized. So yeah, it's a big issue.
Thanks. And Luqman.
Yeah, exactly. Yeah. Talking about data privacy, and there's a FIDO alliance that's actually championing you to store your data on your smartphone. So everything you need to do to secure communication with the service provider, you can ensure that you have absolute control over your data without some other people holding on to data. like the other guys mentioned, data privacy is the ultimate right now, and governance is important. When you look at most of the service provider or solution provider, they actually give banks, financial institutions, the options on how best to host their data. But then you now have the regulatory authorities insisting on how the data should actually be governed. So in countries like Morocco, there's a data protection, there's a biometric protection agency that ensures that no organization should have a biometric database on their premises. It has to be centralized with either the government or you host it on your smartphone. So banks or other organizations don't have access to it, and you have absolute control over how your data is being used. But it's an evolving discussion, and like it's quite, it all depends on how the service provider or the solution provider position itself to ensure that regulatory compliance is in sync with the way the architecture is deployed. Thank you.
Thank you. Paresh, do you have a comment on that?
Yeah, no, I think my fellow panelists have covered most things. So I'll just add kind of 2 points there. Remember that AI and blockchain is technology, right? And the data stored on a blockchain network is only as good as its last human touch point, right? And we've got to be very clear about that, because, for example, there's all these, track and trace, supply chain management use cases that are floating around in the blockchain world itself. For example, tracking of lettuce from farm to fork, which is what they call it. What's happening with the guy that's actually scanning the QR code on the packet of lettuce, for example? Can he be compromised? And if he can, or if he has some sort of kind of alternate, kind of thinking of what he actually wants to do, that then corrupts the data on the blockchain, which is now immutable, right? So I think that, blockchain is a technology itself. There is still a layer of governance that we need on top of that, which I don't think we've really figured out. Now, that layer of governance doesn't necessarily need to be manual interventions. It could be automated. It could be, baked into smart contracts, for example. But I still think that there's a layer of governance that's actually needed on top of technology, because again, technology is just the enabler. Second point I'd just like to make is, I think just around privacy of data, and we need to be very aware that, storing of all this information on third-party providers, central databases, and I throw government databases into that, is not a good idea, right? And there's a movement of self-sovereign identity, what we call SSI. Basically, people and citizens owning their own data, housing their own data, and being completely in control of that particular data, of where it's actually being used, the consent it's actually being used for, and turning that into a monetization business model. Right. So, for example, if I hold all of my data around, not just PII and personal identifiable information, but all of my information on my political bias, for example, who I would vote for, etc. If I want to sell that to Facebook, I want to be able to do so, right? For Facebook to then monetize it, but I want to be paid for it. Okay. So I think that there's multiple kind of segments to personal information itself, thereby giving the average citizen complete control of how they actually want to use that data itself. So I think that this whole notion of self-sovereign identity is gaining immense traction, especially with COVID-19 and the various different credentials that will be utilized in the future to represent, whether you're positive, whether you're negative, whether you've taken a vaccine or not, is going to become a lot more prevalent in the future. But I think that for us is, how we should be changing our mindset in terms of housing and securing data.
Thank you. Jonathan, any opinion?
I agree with everything. It's a matter of getting good stuff in and keeping the bad stuff out, right? So if you have a self-sovereign identity and someone else is able to verify it, right, then you can do some really creative banking solutions. But if you have a bad actor who's somehow able to infiltrate that system, and then he or she has the power to approve other people with some of the solutions I've seen, you would verify that the top half of my face is my face, or that my name matches my passport, or different things like that. If you have enough bad actors to start creating these false identifications, then those false identifications on this type of network would basically corrupt it. In the US, we have a Real ID Act that's supposed to be coming in October, where the government's really taking the identification of its citizens more serious. What does that mean? That means you can't get on a flight unless you have one of these real IDs or a passport alternative. And so identity is incredibly important, especially as we expand back to that ICO kind of model of international investments. But we have not, in my opinion, have a really good model that works globally yet. Until we start really identifying solutions that make it available globally, it's going to be really tough to put the good stuff in and get the good stuff out.
Thanks, Jonathan. Thanks. Now we're going to wrap this up with crypto payment solutions, and I'd like to come to you on that, Paresh. Crypto payment solution at the moment, custodian and non-custodian crypto payment platforms are increasingly gaining popularity among cryptocurrencies investors and consumers. To some extent, the hopes is that these services will foster wider cryptocurrency adoption and offer better financial services. For the most part, transaction channels are secure and you can transact peer-to-peer at low cost. So what's your view on crypto payment solutions and their value proposition?
Yeah, look, so I think that the value proposition is there, right? Especially in terms of peer-to-peer direct payments, elimination of central intermediaries like, potentially commercial banks, from that transaction itself, lower cost, ease of use to a certain extent, and really, democratization of access to payment system to people that would typically, not have that particular access, either they being unbanked or underbanked population, particularly within emerging economies. So I think that there's a tremendous value proposition in that, right? But I'll talk about some of the downsides because I think that it's quite important around that. I think from a technology perspective, I'm not sure whether we're there yet, right? I think that there's transactionability. Cryptocurrencies that facilitate transactionability, right? Potentially like XRP, Ripple, and a few of the others. But like Bitcoin, would you use Bitcoin to go into a grocery store and buy your weekly shopping? Would you stand there on the checkout waiting for 10 minutes for that transaction to confirm before you take your groceries and you go back home? Probably not. So I think that there are a myriad of issues in terms of scalability of the platforms itself, together with liquidity in the market and volatility of the currency prices itself. So I think that the value proposition is there. We just need to figure out how do we iron out the various different hurdles and the challenges that we see with the various different cryptocurrencies. In addition to that is obviously regulation itself, right? So most countries don't have cryptocurrencies in whatever form it is as legal tender. So, merchants and service providers are not mandated to actually accept that. So, where can it actually be used? In various different disparate merchant service providers. So I think that there's multiple barriers that we actually need to get through. But for me, I'm very bullish and I'm very positive around the various different advantages that this could bring, especially within a kind of African context. Kind of in symbiosis with things like M-Pesa and other mobile money kind of mechanisms.
Thank you. Jonathan, what's your view on that?
I agree. I think that Bitcoin is a terrible solution when it comes to everyday transactions. I think it works really well if you want to do some overly complex, real estate transaction where you want the money immediately. But you have to expect the volatility of the market. And 10 minutes may not seem like a long time, but if you're transferring a large amount of money, that could be a long time. But I do see the benefits of it, with peer-to-peer transactions, especially cross-border, especially remittance payments overseas. It's just absolutely critical that we get this infrastructure kind of figured out, because the people that are suffering the most are the people who are economically disadvantaged, and it's not fair. And so once we kind of solidify those basic tenets, I think that we can start going back to that global vision of mine of investing globally and getting the money to the people who are actually kind of building new businesses and building new business models around the globe and are working with international teams. And that payment and remittance is the first part of it.
Thank you. Jonathan, do you see these payment products replacing the traditional fintech products, or should both rather collaborate to scale the financial services industry?
Yes and no. I mean, I think that someone like Square and Jack Dorsey are clearly trying to, replace a lot of the banking solutions that we have in the U.S. because it simply are just too outdated. There's a company called Affirm that is now doing kind of like almost a layaway model or a loan model where they're able to kind of judge your credit worthiness off of various data points. And so the fintech model of taking your data and determining whether you are a credit risk or whether we can trust this payment from a compliance standpoint is something that we're going to continue to evolve as we expand, our reach. Most people travel more, most people have different investments. Everybody's trying to diversify their portfolio. And so, as we continue down this path of blockchain development, I think that we're going to not realize that we're going to use blockchain technology in a lot of the things that we're already kind of using it for. And so it might not be something that we see on the front end. It may be in a better, prettier wrapper. But when we look at the code, guess what? It's going to be on a blockchain.
Thank you. Thank you. And finally, let me quickly ask Luqman, how is analytics changing the paradigm in your field of work and helping pave the way for innovation in the digital economy?
Well, thank you so much. When you look at the way technology has evolved over time and the amount of data that you have in most organizations, take a bank as an example, where you have tons of data, but like not well refined in different silos. So the emergence of artificial intelligence or very smart algorithms have been able to enable data being well refined and generating meaningful information that can now be used for decision making. For instance, just like what Jonathan mentioned, there are organizations using or doing alternative lending, making use of alternative data. And where are they getting the data from? From multiple sources, not from the traditional source that banks do follow. So you have organizations providing algorithms to extract data from telcos, from utility companies, from banks, from social media, combining all this together, making providing at least well-informed analytics that can now be used by organizations to make decisions, to do some of the things that they've not been doing. For instance, when you look at the advice to bankers in 1863, the US Secretary of Treasury mentioned that banks should not concentrate lending onto just few customers. They should diversify. But when you look at most of the big banks today, that is exactly what they're doing. Lending to few customers, and almost 90% of their customers, especially in Nigeria, when you look at most of the big banks here, 90% of their customers don't get loans and advances, but the corporate customers, very few customers, account for almost 80–90% of the lending. So, but with the emergence of smart technology, AI, and what have you, banks are now trying to drill down some of the customers that do not really qualify in quote because of reliance of traditional data are now being given loans. On a daily basis, I receive text messages, my driver, my maid, some of my colleagues receiving text messages saying they've been pre-qualified for some money, which never happened like 2–3 years ago. So that is the information that we're getting based on data being analyzed smartly and also being appropriately utilized.
Thank you. Thank you. Yudhvir, do you have your comment on that?
Cool. Yeah. So it's very similar to what's already been said. I think the big push now is to actually go down the route of personalization without the idea of sounding or feeling creepy, right? So to try and find that balancing act between saying, how do you offer such a customized or personalized solution? If I look at my example for small, medium, large businesses, without actually going down the route of like overcomplicating or overpromising on stuff. So a lot of the initiatives is actually going towards customer centricity, and the big requirement on that, which is a function of any large corporation, is that the analytical capability might exist, but the data capability also needs to start catching up to it. What I mean by that is that it's quite easy to go and say that any company has a lot of data. It's difficult to actually go and stitch all the data points together to actually go and have a single non-conflicting view of what the customer actually looks like. And from what I've seen, a lot of the focus is actually less on the, if I can put it, the use cases, and more on the actual foundations. How do you get your data in one place? How do you actually try and ensure that what you're putting in is quality? What are the governance mechanisms? We talked about the governance mechanisms around that. What are like when you talk about a single view, what is the single view? Is it something which incorporates only, let's say, financial services data, or does it also start to incorporate other external data sources? So I think a lot of the focus right now is much more on providing the data to be clean, providing the data to be accessible, and providing the data to be trustworthy for further analytical use cases to start building on. The use cases have been there, whether it's AI driven or normal or non-AI driven. The use cases have been there. What was not always the focus is, okay, now if you can build a let's say a chatbot, surely you have the data to go and build that. And people are now starting to focus more on if the data is there, can it be trusted, is it available, etc. So I think the shift is much more towards, if I can put it, not just the analytical output, but also the input of it as well.
Thank you. Jacques?
Yeah, I fully agree with Yudhvir and Luqman there as well. I think the key thing around AI is to have rapid access to all available structured and unstructured data. So it doesn't matter what industry, what sector, those are key words. So even from a Cortex Logic perspective, as we work with business enterprise and corporates, that is kind of Yudhvir is just clearly, obviously he's from F&B, and he knows exactly what the situation is there. But I can tell you within the financial services sector, but also retail sector, healthcare sector, doesn't matter. You do find that data is in silos, and there's a lot of bureaucracy around data, and just to really get access to all available data. And then you also need this, if you want to operationalize, you also want this not only a way to get it in an offline fashion, but also if you plug in your solutions for production to operationalize, the systems needs to be in place to feed this models with the right information and the right data. So you need to automate the data preparation and the way data is being accessed. So there's so much to be sorted out from that perspective if you want to make it real and create these quick win solutions. So I absolutely fully agree with that. Data quality is another big one there as well. So there's just some of the practical things that you need to do to make it work. And my final comment there, data generation is really exponential, and especially with people using smartphones. There's so much information available. And the data utilization is linear, so that gap is increasing all the time. So if you talk about innovation, there's so much that we can unlock value that we can extract from existing data that's not being done because of basics and infrastructure. It's like people standing in the way, not really systems and other things. We just need to do the right things, put the right stacks in place, organize ourselves around it properly, get the right people in. That's what we do. Is we are like an AI partner for these business enterprises to to help fast track and solve these issues as well, to kind of complement businesses in that regard. So there's plenty to do. In terms of just innovation, there's so much opportunity to create domain-specific AI-driven solutions. So those are things that we're working on, to create end-to-end solutions that's also disruptive, that even solutions that's potentially disrupting specific application areas within industries as well. So anyway, so exciting times. I think it's incredible opportunities to innovate. It's almost like a kid in a candy with a toy story. There's so much to do, and it's just to focus on the right things that's going to have the highest impact, and that's the challenge. But anyway, yeah.
Thank you, Jacques. All right, we're now going to move to the Q&As. So we have 5 questions from the attendees. So I'm just going to read it out, and then any of the speakers can take that up. So one question here says, how would you decide what technology to go for? What are the determinants of these for a commercial bank? Any speaker to take that?
Yeah, I'll give it a stab. Look, I spent pretty much most of my career working for large tier 1 investment banks within the corporate sector in the financial technology space. Look, I think that it's a big question, right? I think it really depends on what vertical you are working in within that particular bank. What sort of technology? What is the value proposition, and what is the problem that you're actually trying to solve for, right? So into the last commercial bank that I worked for is taking from a customer-centric perspective and trying to figure out what are the problems first, rather than tackling it from a technology perspective. So I think once you go through that design thinking process and you eventually get into an execution implementation phase, I think it's about going through evaluation of technologies. But in large financial institutions, there's also biases around what is the previous technology, or what is the existing technology being used within the organization, right? I won't use big names here in terms of technology providers, but things like 3-letter acronyms and companies of that front have discounted rates for their various different product offerings and their technology offerings to large institutional clients, right? So a lot of that bias then comes into the thinking around saying that, oh, listen, we already use this service from client X, for example, and we already have an enterprise license with them. Let's try to use one of their products for this particular problem that we're trying to solve for, right? And it's not always the case of using the best technology for the problem that you're trying to solve. So I think that there's multiple kind of tangents, multiple lines of thinking of what sort of technology should actually be used, and then potentially going into a request for proposal type solution and going through an entire governance and bureaucratic type process you should actually use. That's only half the battle, right? Once you choose that technology provider, then you've got to onboard them, and they have to go through compliance and legal and become preferred supplier, etc. So yeah, very broad answer for a very broad question there.
I can maybe just quickly add to what Paresh is saying there. Just coming from, well, I've spent the last 2 decades building solutions, technology solutions, and I remember in the 2000s, we did everything from scratch, proprietary from scratch, no open source. And currently, we're living in the kind of where we talk about the API economy, application program interface economy, where it's like Lego blocks, plug and play. And we are looking at best of breed and looking at, obviously there's proprietary things, but there's open source, especially if you think about artificial intelligence, AI, and the latest tech stacks and what Google and Facebook and Microsoft and all these kind of companies are making also available along with other players. And then obviously you do have commercial APIs and solutions as well. So it's a mix and match, and it's almost like you need mastery of that smart tech toolbox to understand what technology, what components to use where. So you need people that's really that understands this toolbox. Not everybody understands it, so you need various skills and various people to help come up architects with the right solutions around these kind of things. And we're building, it's incredible what you can do these days with very small agile teams, but people that's knowledgeable about the tech stack. But as Paresh said, it always starts with the problem, the business problem. What is the thing that you want to solve? Tech is just there to provide solutions. And what's relevant right now might not be relevant in 6 months' time or in a year's time. So you've got to be super agile around this and very adaptive around technology. And yeah, but so it's very, very interesting times. And yeah, so it's not easy to make the right decisions, but one needs to be disciplined around that. And yeah, anyway.
Well, maybe, okay, let me just add a few comments. The first thing is it depends on the technology, just like Paresh mentioned. If you're looking at digital technology, like I mentioned earlier, then you need to look at how best you want to do your onboarding, logging into your platform, as well as doing your transactions. Those are things that you need to understand and then look for the appropriate technology. The other model for you is, as a commercial bank, there are lots of startups, fintech startups all over the place that you might as well say, you know what, I don't want to waste my time. Just like what Goldman Sachs did, they wanted to move into retail. Rather than wasting too much time, they acquired a fintech doing personal finance management. So a bank could decide to say, you know what, I'm not an expert in this new technology. I might as well just go out there and acquire someone that is doing it very well and then shut the cycle and then hit the market as quickly as possible, since you already have a lot of customers that you can actually leverage on and make them excited about your value proposition.
Thank you. Thank you. Okay, the next question is, Luqman, this is probably for you. It says non-contact biometric modalities such as voice, face, and iris will be more in demand for both online payment authentication and onboarding. How commonplace is this in the African market now?
Thank you so much. I think it's commonplace. For instance, we have one of the biggest banks in Africa using our solution for digital onboarding, where for you to open an account, all you need to do is do a selfie with your face and then do a liveness check where you either shake your head or you blink or you nod, or there's a live reflector coming out from the phone to ensure that you're alive, and also a 3D capability to ensure that you're not having a mask on your face. So that is on. And also when you're doing transaction, the ability to combine all those faces, because what we did was to make your phone your token. So it's a mobile first strategy where for you to do any transaction with your bank, it must be through your authenticated device that we have, of which your biometric will now be channeled through. So that is what is happening. MasterCard launched Selfie Pay some years ago, using our technology to make it happen. So for you to do card not present transaction online, you don't need your card. You just use your phone and a selfie to make the transaction, to consummate the transaction. So it is just like it's happening globally, is also happening in Africa. And this is something that can easily be implemented across Africa. All you need is a smartphone, and then you have access to your banking account, and then use your biometric to authenticate yourself. So it's something that's available and is seamless to implement.
Thank you. The next question in line is, how can blockchain and AI be used to make a decentralized banking infrastructure in Africa, in African countries? What would be the advantages, the trade-offs, and what can be done in terms of improving government policies? So any of the speakers can comment on that.
Yeah, sorry, go. Paresh is probably.
Please, no, go. Okay, cool. Yeah, look, so, I think that convergence of these 4IR type technologies is really where we're going to see a lot of the impact and the power of it, rather than in isolation itself. So I think with regard to decentralized banking infrastructure itself, I think we've already covered quite a few of the domains on this. And this, for me, would really be where the future of finance is going, right? I don't think we're ready for a completely decentralized financial system at this point in time. And especially when we think about the various different services, client experience, user experience, wallet mechanisms, etc. So I don't believe we're in the game of complete decentralization at this point in time. I think we might get there at some point in time, but decentralized banking infrastructure would be a very high impact type solutions, especially for the African economy, where we have a very large population of unbanked and underbanked population, right? So I definitely see, in terms of blockchain, decentralized finance, borrowing, lending, utilizing digital assets, and I'm not using the word crypto, but any sort of digital asset as a particular payment rail. We now start talking about the fintech vertical payments. We have a lot of savings type solutions, innovative savings type solutions that are out there in the market today, and then combining everything with AI in terms of things like risk management, risk profiling, KYC onboarding, that are not using the kind of traditional financial system at this point in. A lot of the solutions being put out there, we need a lot more traction and a lot more, kind of build and usability around all of this. So I think that, these types of solutions are going to be key to emerging economies.
Yeah, no, I fully agree with Paresh there. Where I got quite interested in this, and I think this is still in the future, I actually on Medium read some interesting articles. I don't know if you know the guy, Trent McConaughey. He's actually one of the founders of Ocean Protocol. I think he's also involved in, I think there's the blockchain hub in Berlin. I think he's currently in Germany as well. He was, like me, he's also in AI for a long time, and he moved into blockchain. And he wrote some interesting articles on decentralized autonomous organizations and AI-driven solutions. But it is definitely still futuristic type of thinking. Lots of potential, interesting stuff there, especially around smart contracts and so forth. But anyway, so for me, it's just a point of interest. I'm trying to follow that and see if there's potential there. But yeah, still future stuff.
It's sorry, Jacques, it's not actually that far off into the future. I think that there's a lot of DAOs that are currently running at the moment, and a lot of companies that are looking at how do they operate in terms of autonomous organizations. And I would say especially so from the chaps that are looking at dApps or decentralized applications on Ethereum and Stellar and those types of solutions are looking at how do they define companies? How do they define organizations of the future where everything is actually decentralized? So things like incentive mechanisms, staking, voting, etc. So it is definitely for the future, but I think the future is coming very, very quickly.
Yeah, I agree with you. I was actually more referring to proper AI-driven, machine learning-based type of autonomous systems where the system is learning based on the data and the transactions and the interactions that's happening. But first, before you do that, you need to get the dApps to work in a proper fashion. And you're right, there's a lot of stuff happening, but we'll see how practical it is. Exciting times.
All right, so thanks. The next question is, it says, is DLP, data loss prevention technology, comparable to blockchain?
Sorry, can you just repeat the question? I didn't quite get that.
I think it's referring to data security. It says it's a DLP, which is data loss prevention technology, comparable to blockchain technology.
Look, so I'm definitely not an expert in that question or data or DLP itself. I would just say that, off the cuff, we're probably looking at, one of the advantages of blockchain is immutability, which means that, once a record or transaction or any, value is stored on a blockchain itself, it is typically immutable, which means that it cannot be amended, it cannot be deleted. And if you had to have a subsequent, rejection or amendments on that, you would have to have a subsequent transaction or subsequent, value that would be, kind of stored on top of that. I'm no kind of loss prevention expert, but that would really be the kind of equivalent for me there.
Thanks. Okay, the last one says, how has COVID-19 accelerated development and use of emerging technologies across industries?
Massive.
Well, you can, that's big. It's big. In my space, ever since the COVID situation happened, there have been a spike in the number of financial institutions interested in doing remote onboarding. Even some regulators in some African countries are even allowing banks to do 100% remote onboarding, which wasn't allowed previously. So also, when you look at pension organizations, the typical model is on a yearly basis, you need to come and prove that you're alive. But with COVID, you're better off staying at home because of your age. So technology is also enhancing that you can do remote proof of life rather than moving from one place to the other to showcase. So I think it's a new normal for everybody. And fortunately, I'll say technology is actually getting a return. Most organizations that invested in technology are getting a return on their investment right now because of the COVID situation. A lot of remote activities are going on, and because most of the technologies being used are tested and they've been used for a while, so the payback is actually now. And the best we can do is to actually keep on improving on it. And as more data coming in, then banks, financial institutions will be able to position better services in terms of providing personal financial advices to customers on how they can actually be better in terms of services, so to speak. But I think it's been positive so far.
Okay. All right. That's the end of the question. I would like the speakers to give us a closing comment on any of the topics we've covered.
Yeah, I just want to add on to what Luqman is saying there. I think what we also find here is that we're living in very interesting times, and there's definitely a push towards digitalization. And I think AI-driven digitalization, we'll see more of that. And I've seen it in various industries. Even if I think about my brother, he's a school teacher, and he's not really involved where he's using smartphone and stuff, but now he's using digital classrooms and he's using all these kind of tools, and because they have to. And we see obviously people using Zoom and all these kind of things as well. But I even think about if you think about personalized engagement, you think about call centers. Suddenly you need. Is there other ways of interacting with customers? If you don't have humans or people there, then there's going to be intelligent virtual assistants or things like that that's going to help provide that service and to automate things. So it's driving things in that direction. I think the new face of business, of customer-facing businesses, is going to be this intelligent virtual assistants in various formats and form factors and so forth. So I think there's a much bigger drive around this as well. So yeah, I think technologies like blockchain and decentralization and all of those kind of things is coming into play now. So I think it's just pushing things forward a little bit. So yeah, exciting times.
Thank you. All right. Any other closing comment from any of the speakers? Jonathan, do you want to give us a closing?
Yeah, the biggest thing I can say is if you have time right now, look into this technologies, like take the time to learn about it. If you're on this call, that's a good start. You know, this conference is very helpful to get a preliminary education and interest in it. But do your further research and really, you know, take a class, or there's a lot of good online resources that are free or at a significant discount at this point. And then if you still have time and don't understand it, then reach out to these professionals here and try to, you know, grasp it and see how you can get involved. Because you may not be an expert in this stuff, but you probably are an expert in your field. And if we can help expand and grow this ecosystem, I think that's what we're all here for. We believe in this technology, we believe in what we're doing, and we'd like to see it grow.
Thank you. Yudhvir, one last one from you.
Cool. Yes, so I think especially during this COVID time, it is the best time to actually go and reflect, right, and introspect. Like I think something I said previously, said the option to go digital was there before COVID. Now it just becomes more exacerbated because you literally have no other options available to you. So at least like the so-called shock factor is there. The second part of it is and to what John was actually saying, it's to then say, okay, I know I need to do it. Now what do I need to do? And that's actually where the next part of this goes in, to actually move away from, okay, you convinced me, COVID convinced me, I need to be digital. Now, how do I actually go about executing stuff? Because that by itself is another chicken and egg problem. If I didn't have the money before and I don't have it now during COVID, then what do I do? Versus if I do have the funds available to go and change my entire skeleton to be digital, you know, it's rehauling everything. Which is a significant investment, but it also pays off in the long term. So I think now the focus is much more on start simple. How do you make your business digital? It's there by trying to explore that, then you start to stumble upon, oh, there's this technology called blockchain. There's a thing called AI. There's a thing called cryptocurrency as an example. And that's when the execution layer starts to become much more important. So I think the shock factor is there. Now it's a question mark about how do you execute.
Thank you very much, everyone, for taking the time out to join this event. We've come to the end of this panel discussion, so I'm gonna leave it now to the host, Finnovation World, to say anything if they will.
Okay, so we would like to thank all the speakers for your participation today. Thank you all. Good to see you, in this time. And we would, try to stay connected like this. And our next session will be on 24th at 3 p.m. EAT. It's the same time. And we are trying to do this on every Wednesday. And we'll try to continue for, till next month. And we'll keep everyone posted with all the updates. Thank you once again. Thank you. Thank you for your time. Have a great day.
Thank you. Take care.
Thank you very much. Cheers, folks.
Bye-bye.